Yo, what is going on YouTube? And welcome back to the Mobetta Trading Channel. Today is Monday, April 28th. We are coming down to the final days of April and obviously ending the first month of the new quarter. We've had some really good moves this month. Yeah, man. This is my first time actually being back on the charts for about a week. I've been in Houston. I've been doing things, traveling around, so I haven't really been able to sit down and be at my desk and on the charts. So this is gonna be the first time I'm actually taking a really close and deeper dive into price action for the week. So we're gonna be taking a dive in together, and of course, as always, we're just going to essentially be marking out our support and resistance levels where we're going to be expecting price to move and to react to over the coming days. As we are coming into the end of the month, there's probably going to be a lot less volatility, a lot more consolidation going on. So you should expect price is going to move in a fairly small range, right? Until the start of the new month, and we can see if the trend up is going to continue as it has in April. But nevertheless, let's go ahead and take a look. Let's just jump straight into Bitcoin, right? So Bitcoin has had an incredible last week, pumping from 84,000 all the way up to $95,000, almost $96,000. It's about a 14% increase. And if y'all go back and take a look at any of the videos that we posted over the last week, we had talked about how we needed Bitcoin to break the $85,500 area, and it had a very high probability of running into the 90K area. I'll be 100%. I did not think that it was going to get all the way back and take out this fake pump. The fake pump from way back in the beginning of March. Obviously, that was the Trump pump, if you want to refer to it as that. But it did. Came all the way back up to 95K, took that out pretty promptly, and now we have just been trading sideways for about the last week. So really, I guess I haven't missed too much, to be honest with you. It doesn't look like it. I imagine the same is probably true for most altcoins as well. So anyway, let's just go ahead. We're going to start with some top-down analysis. As you see, Bitcoin has basically broken the previous downtrend. You know, if you're a trend line person, it's very easy to see. Connect these dots here, boom, right? Bitcoin just touched the trend, almost touched the trend, touched trend line, finally broke through, consolidated, and massively pumped out. Now, typically, I would say like what most trend line traders are waiting for would be a pullback into where the breakout area was. In my opinion, if this is a bull market truly, if we are beginning the continuation of the bull market, we will be offered very shallow pullbacks and much larger expansion areas, right? Like if price is going to appreciate, it is not going to give everybody the time to get in lower, if that makes sense, right? Now, if we're going to continue to the downside, this pump to the upside makes a lot of sense because it is going to give people a chance to buy in higher if it's going to continue going down, right? So as we're looking at it right now, I'm just going to go ahead and erase this because again, I'm not a trend line trader, but just to kind of visualize that we were obviously in a downtrend and now we're breaking out, reversing, or we're starting a new trend, which at this point looks like it's going to be a trend to the upside. So we'll just map out accordingly, right? Either way, it doesn't really matter. We know what we're looking for. We know what levels are our levels of validations and invalidations. So here we go. All right, so we're just going to go ahead and start marking out resistance levels. Obviously, this was a breakdown area. Price broke down from here, right? It was holding this as support. Boom, that was before the capitulation event, for the tariffs, all that kind of shit. And now we've come back and we've retested it. We tried to punch through it, couldn't. Consolidated. Now this is over Saturday and Sunday, so you can't really call those like consolidation days, I guess. Those aren't really trading days. But today we have pumped into resistance and now are rejecting off of it. So as you see, we have formed support on the daily, right? Which there's probably going to be a support a little bit lower. I would say probably around here. As you can see, we have some rejection wicks. Okay, so we formed some support on the daily, which we will go and adjust accordingly. All right, so now if we drive down to the 4 hour, got a little bit better picture being painted here, right? So we obviously have this doji. This was a wick into support, right? Here's support here. The wick into support moved swiftly away back into resistance and now is rejecting hard. Obviously, this resistance candle has, or this bearish candle, I should say, has broken this 4-hour bullish candle. So now what we would need to see is if this low can be broken on the 4-hour candle at 93,500. I would anticipate that we probably move back down into the support area around 92,000. Now, whether we hold there or not, it remains to be seen, right? We should hold there. We should not dip down into here if we're going to remain bullish, in my opinion. I don't think that is something that should happen. However, we don't necessarily have to dip down all the way to 92,000 either. If it is bullish, again, shallow pullbacks are more desirable. If the 4-hour were to finish here, you got some support being created. So, I think the best thing to look for would either be wait for a bullish candle to break and close above this resistance area, right? Or a break below this low could be a move down into support. Okay. So I guess those are really the two scenarios that I would be looking for personally. Where we're at right now, this is a no trade zone. There's too much chop. Candles are printing side by side. There's no separation. There's no air. There's no gaps. There's no nothing, right? At least on the 4-hour. Okay, so again, you can see that here we're forming some support. This was an area of support. Just very messy. It's just very messy on the 4-hour. So let's drop this down to the 1-hour here. Okay, even on the 1-hour, I don't really like this support. I don't really like the way the support, looks. If we were to break below 93,500, you have a good like 50 or 500 pip, $500 range. Sorry, 500 pip. You have got like a good $500 range that you could take price down to $500-$600, and it just looks really choppy. So, in my opinion, this is just no trade area. This right here, as it's painting right now, this is what we call a no trade zone. This is a no trade zone. And the reason it is a no trade zone is because just look at how messy it is, right? There's no clean price action. There's no clean candles until you get below 91,900 on the sell side, which, you could be looking for support instead to develop down here. If we were to be able to, get like some muddy moves, something like this, you would want to see support develop down here, and then you can take a long back towards this top side of the range. Otherwise, price could just do anything. It could literally be here. It can be here until it just creeps up and gets out. So this is just a muddy range. It's not worth trading, in my opinion. In my opinion, it's not worth trading. I would like to see some cleaner developments happen on the chart. And in my experience and in my opinion, the only way those clean developments are going to come is if we either, we can bounce here, form this support, and then we can start moving up to the top side. Or we would need to get down here and hold this area. Or for longs, this is all for longs, by the way. I'm leaning long biased. Even though we are coming into the end of the month, we'll probably see some sort of pullbacks. But for me, shorting right now, unless you get a very clear setup, shorting is going to be very quick, and you would want to be in and out just as being long had been for the last several months at this point, right? But for breakout scenarios, if we're breaking out to the long side, we'd want to see us get up here and accept above here, breakout, retest, and then get the continuation move up towards, probably like 100K, I would say. We've got a good area where we can trade into the 9900K area. Let me turn this red. This would be, this would be our resistance over here. As you can see, we've had price consolidate in this area, find acceptance before breaking down. So we could see something like that. The only way that I would be looking, really, I guess the only way that I would really be looking to short and catch a significant short is if we were to fail this. So if we got up here and then we pushed up, but we couldn't hold, and then we came back and accepted into this range, right? Then you could look to take a short, maybe down to into this area. But I don't know. For me, shorting just doesn't feel like the smartest move in these conditions. Even while we're consolidating, there's upper and lower bounds that you can trade to, but it just feels like shorting is going to be a lot more effort than going long here, right? So what we want the least effort and the highest probability. So for me, the highest probability is waiting for support to form on a high area of support, on a high time frame area of support, like 92,000. It's also a round number, so it's a good round number to be forming support at. And also the least resistance. If we are bullish, longs will have the least amount of resistance to be taken or to be shown in an uptrend, right? You don't want to trade against the trend, so you don't want to be shorting in an uptrend. You don't want to be longing in a downtrend. And yeah, I hope that is pretty self-explanatory. But we do have some clean highs here, right? You can see these clean highs, 1 bounce, 2 bounce, very clean rejection. So it wouldn't surprise me to see us get up here. And if we can hold this area above 95,000, that would be an excellent area to go long from, especially considering on the higher time frame, we are bullish, right? But be cognizant of the fact that price can pull back, and it can, it can deeply pull back and close back above a support area. So you just want candles to develop in a high probability manner. So whether that's a doji on support, whether that's a bullish engulfing on support, whether that's a shooting star at resistance, kind of like what we're forming right now. You want high probability setups to present themselves before you get positioned into the market, right? Which is why a lot of people cannot retain the gains that they make because they want to be on every move in the market. They think every move is a high probability move, and that simply is not the case. Okay, so again, I guess I'll just reiterate just so we're very clear. This is what I would be looking for. I'd be looking for price to come down into here, form some sort of support. It's probably not going to look like this, just so y'all know. If anything, it might look, we might get a wick that comes down and takes this low here, and then a support to then price reclaims the support area and then continues moving up, and it can still be like ugly, right? But then I would expect it to get to the top side of this range, or I would be looking for price to move up, get up here, accept above 95,500, and then continue its move up towards $100,000. Otherwise, the only way that I'm looking for shorts, okay, is if we get up here, we spike above and we fail, and then we price accept. And by price accept, I mean we consolidate under 95,500 and then break a support. That would trigger me short back down to this area. Okay? All right. I hope that is very clear. So either we form support here, go long, we break out, hold, go long, or we break out, fail, go short. And I know that's like saying, either it goes up and you short, or it goes down and then you long. But I mean, that is how trading works, right? Like that, these are the scenarios that you have got to be prepared for. And if you're one of those people who are saying, either it goes up or it goes down, then you're probably an unprofitable trader. And I'll just say that, and I'll leave it at that. I'm not going to fiddle around too much with the shenanigans. All right, so we know what we're looking for. Either we can break above, we can hold, and we can continue pushing up, or we come down into this area. Given that it's the month's end, it wouldn't surprise me to see a pullback into the 92,000 area, and form some support around here, and then we can push back up towards 95,500, and then anticipate from there even a breakout. You know, so cool. All right, that's Bitcoin. Let's go on to Ethereum. Man, Ethereum, what a freaking phenomenal trade. What a freaking phenomenal trade. I'm really upset that I cut this trade so short. I didn't let it get all the way up into the 1815 area, even though in the Discord I was telling them that I thought 1800 to 1850 will come pretty quickly and swiftly if we were able to get if ETH was able to break out of the 1680 range, right? And that came from the higher time frame. If you're looking at the weekly, when we were looking at this move, so that's not what the weekly looks like. When we were looking at this move, ETH was pushing down into this weekly support area, right? And my whole thesis behind this move was if we're going to continue bullish on ETH, it can't break the weekly low, right? And if it touches the weekly low, if it breaks below it, it's got to reject away very quickly, or that leads to acceptance down to the 1380 for the wick fill, down to 1380s, right? So on the weekly time frame, this is what we were looking at. I got in once we flipped back above the weekly open at 1590. I was in and I closed at 1720 or 1715, something like that. It's either 1715 or 1720. I can't remember. Okay, so I caught the very bulk of that move. This is a very good move for me. It was one of the better trades that I've had since the start of the year. So that was a good one. Full conviction when everybody was thinking, ETH is breaking back down to 1300. As soon as we flipped 1590, I got in. I didn't hesitate, didn't question it. And then I had my stop loss below 1565. I had it below 1565 because I didn't think that we should be able to cross back below the prior daily low in that moment. Okay, so then we moved away, came all the way up, took out all this resistance. Again, if you go watch any of the videos that I put out over the recent weeks, this was the area of focus where I anticipated that price was going to be able to move into once we broke out of this range, right? And it did just that, right? Now, even then, I still closed short. I still closed really short just because ETH has been such a underperformer compared to the rest of the market. Even when everything else is moving, obviously, like ETH has just been dragging ass, right? Got the Chinese disease, it's dragging ass. Okay, so anyway, let's go back to what we're looking at now. Now that ETH has made its move, it has come up and it's taken this liquidity up at 1845. I think it even touched 1850. Looks like it touched like 1857. We have some support being formed on the daily time frame, right? So there's probably some better interaction around this area, around 1750. And guys, the longer that you guys are practicing and you start learning how to spot support and resistance, it'll be very easy for y'all to understand what levels are important and what levels aren't. This level is obviously important. It was this level by this level I mean 1750. It was obviously important for ETH. That's where we formed support before we broke down and capitulated, right? So this flipping this area and maintaining price above is imperative in my opinion. If we were to accept price below 1750, maybe we don't come all the way back down to 1550, but at least probably closing this gap, if that's what you want to call it, but this space on the weekly bar, or on the daily bar, excuse me, down to the 1660 area. This is also the breakout. So if we were to accept below 1750, I would anticipate that probably 1650 gets tapped into. Right? But okay, anyway, so we got support. This has now been an area of resistance where we just managed to poke above and we rejected away from. So we'll just go ahead and mark this out. and then we'll mark our next area of major resistance, which is going to be here in this 1900 area, right? Okay, we'll go ahead and let me mark this. Boom. All right, now if we drop down into the 4 hour, give us a little bit better context. What I love what is actually happening right here on ETH, because as it consolidated here before it broke down, now we are consolidating, and not only are we consolidating longer, but we actually have even better like price expansion in the consolidation, right? We have a larger range, right? So you can see here, like, what I mean by that is price was at 1775 up to 1835 down to 1790, right? Like, it's a very tight range, and then it breaks down. This range is all the way from about 1750 up to 1840, and it's playing this full range. Like, it's really consolidating and using this entire range to consolidate. So it's accepting price. It's accepting price strongly at this level. So we definitely want to see 1750 hold. Again, if 1750 were to break, I would assume that we come back down, into this area, and we could have some hold up here, but I just doubt that it would, price would stall there. It would more than likely come to test the breakout area down into the 1650s. But so long as we're holding this area, ETH is looking really good. Now, what I would prefer to see is that we get a candle to close above this area, right? Get a candle to close above here, a bullish candle to close above 1845, and then I think we have room to push up to 1925, which is about a 800 pip range. It's about an 800 pip range, about an $80 range. So it's an excellent move up into resistance. And whether we came to take out this high or, we kind of stalled out in this area, would remain to be seen. But it would offer a great trade nonetheless. Equally, a great trade would be offered if we were to close below 1750. If we were to close below 1750 and then, price were able to wick up and break below this candle's low, then you can anticipate a good move back down into the 1670, 1680 area, right? Otherwise, just like Bitcoin, this right now is a no trade zone. This here is a no trade zone. Okay, and I'm going to change the color of it. We'll just make it white, I guess. Because if it's white, it ain't right. So this is a no trade zone right here. Right? And the reason is because candles are printing side by side. There's no space. There's no gap. There's no room for price to move. The only way this would become a tradable zone is if we were to get price, to form something like this, get like a doji that finishes something like this, right? Maybe with and it doesn't have to look exactly like this, but with the wick on the top, and then we were to get price to push above this high and respect the low, right? Then we could anticipate a move back towards the top of this range, consolidate, and then maybe a breakout into the 1940 area. All right, I hope that makes sense. And I hope that you can kind of visualize what I would be looking for. Otherwise, what I'll be looking for is just price to just slowly move up, consolidate, and boom. We'd be looking to take the breakout above this area, right? Take the breakout above this area. That's what I would be anticipating. So either we're going to get bullish price action to develop here at 1750, or we're going to look for the breakout above 1850, 1845. Right? Now, just like similar to Bitcoin, almost as what you're seeing right here, right? This is a good example of a rejection candle, right? This is a good example of a rejection with the shooting star that came and tested the other side of the range, right? So this is what I mean by if price were to push up, fail, right? Because obviously it failed. It pushed up, closed bearish, so it failed, and then moved sideways, accepting price below resistance. So move sideways, rejecting price below resistance, and then broke down. That would be the only way that I would get bearish, is if we saw a similar setup like that happen. Okay? Hope that makes sense. All right, cool. I don't want to take too much more time on this. These kind of moves are what we look for over and over and over and over and over and over and over again. Why? Because they happen over and over and they're massively profitable. You just have to be patient and wait. You have to wait for price to develop in the manner that you want it to develop, that triggers you into a trade with no question and no hesitation. If you have to hesitate, if you have to wonder, I don't know if this is going to go in my favor, either exit the trade or reduce your size. Period. Okay? All right, so that's Ethereum, right? We're on the 4 hour, and we drop down into the 1 hour, but even on the 1 hour consolidation, you see how tight this consolidation is. And by tight, or I should say clean. It's not really tight, but it's a clean consolidation level, right? So it's offering good opportunities on the short side and on the long side, but overall trend is long. You don't want to fight the trend. I should say overall trend is going up. You don't want to fight the trend right now. So in my opinion, it's better to wait for longs to set up. All right? That's just my opinion. You can have your own. You can trade however you want to. This is just what I'm looking at. All right. So cool. Now that we got that, let's move on to Solana. Solana, oh wow, man. Solana is looking really, really good right now too. Obviously, we're making higher highs and higher lows. Higher high, higher low, higher high, right? Higher high, higher low, higher high, higher high, higher low, higher high. And as long as we don't break below this, this will become a higher low. Okay? So the trend is up, right? Obviously, trend is up. Okay? At this point, right? So now Solana has come and taken all of the liquidity above $152. It spiked all the way up to $157 almost, and is now just consolidating, just like everything else. Now, what we see is that we had a really strong bullish candle on Tuesday, so we can go ahead and draw support out. This would be our nearest area of support on the daily time frame. This would be our nearest support on the daily time frame, and our nearest resistance is being created right now. It's probably, we'll look at some interaction above this area. This is probably a spike above, so we might not have much interaction, but if we look to the left, we can see that we have rejections in this area, so we'll kind of adjust this. We'll adjust this as we drop into the lower time frames, right? Cool. So now we're dropping down to the 4 hour. You can see that we had a push up and tried to make 2 candle attempts to push higher on the 4 hour and could not. Broke back into the range and now have gone and retested, the bottom of this range, the lower limit, I should say. And we're kind of just stalling out now. So in my opinion, this is probably the better area for support, just because it's more solid, right? Like you had a resistance and then your next candle broke above this resistance area and continued pushing up. Whereas these have created wicks, rejection wicks, and now we got a full body bar kind of running into this area. So I would anticipate that we can, either dip down here and recover and hold this area as support. Otherwise, if price were to close below $143, price needs to close below $143. If it were to close below here, right? And then price was able to push below this candle low, then you could take it down this clean run to support at $135. Otherwise, that would be one way that you could short, considering the price action that's playing out now. Otherwise, just like everything else, you just be looking for price to form some kind of clean support, whether that's a doji, so whether it fakes out and accepts and then moves up, or if it just, comes down into this area and say price were to finish like this, but then your next candle finishes, really bullish, then okay, then you can say, all right, now if price breaks above this area, maybe we can continue to push up into resistance and try to see about an attempt to get out of there. We have some very good movement possibilities, right? We have some resistance much higher up into the $170, $180 region that we could be looking to take price to. Should it find acceptance above $155, right? These would be my next areas of interest for price to tap into. Otherwise, just like anything else, be waiting for resistance to form, or for rejection candles to form at resistance that would take us lower. Or if we were able to break and close through support, that would take us lower. Okay, so either we hold support and we come back higher, test the other side of this range, potentially hold and break out, or we close below, accept below, and then break down to come and fill down to support here, where we may find support in an effort to move higher. Or, me personally, I'll be waiting for price to show some strength and break out above here. That would be best for me. That's what I'll be looking for personally. As it stands right now, with the muddiness, with prices printing side by side, yes, you're correct. With prices printing side by side, right next to each other, moving sideways, you do nothing. There is nothing to do. And that's okay. If you're thinking that you're going to miss out on the next trade, you probably are, because you're going to get chopped up here and you're going to have no funds left to actually take the trade when it presents itself. Right? So just chill the fuck out. Understand that it's the end of the month. Price has got some working out to do, and you don't have to be involved while it does that. Just sit on your fucking hands and wait. Okay? Sit on your hands and fucking wait. Right? Cool. I'm glad we got that out of the way. This is actually forming some really nice consolidation as well. Any approach to the top side of the range has led to a march down. Any approach to the bottom side of the range has led to a march up. So this is a really good range to be trading. Again, you just have to wait for the price action to develop in a way that is going to trigger you in your direction. In my favor right now, it would be triggering me long. So I'd want to see price continue to develop support around here and then get up out of here. We do these over and over and over and over and over again. This is the only thing that I'd be looking for. This is it. Either you look for market structure, so you look for consolidation, you trade the consolidation range. If it offers you enough range to trade, which this does, this is a good tradable range if we can get price to develop in a manner that is that gives us confirmation in our trading style, right? So for me, I need to see candles not printing side by side. I need to see space being developed, and then I need to see price breakout. Okay, until that happens, I'm not trading anything. This is a tradable range. This is about a $10 range. It's about a 100 pip range, right? And so it's very tradable. You just have to wait for price to develop the way you want to. And if it doesn't develop the way you want it to in this range, that's okay. Either take the breakout, or take the fake out. Take the fake out short, take the breakout long, or wait for price to develop on support. Boom. That's it. That is it. I'm not looking for anything else. And considering, again, that is the end of the month, I'm probably not going to do anything trading related for the next 2 to 3 days. Okay? That's just me. Y'all do what y'all want. That's just me. Cool. All right, so now, last but finally not least, let's get to XRP. XRP is looking really, really freaking good. If you were to look at this on a lower time frame, right? If you were to imagine this chart on a lower time frame, this is exactly what we would be looking for. This is exactly the type of trade that we'd be looking for. We had price breakout. Now, it wasn't able to close above here until yesterday's candle. Okay? So, what we would be looking for now is for price to fill this range up into the $2.45 area. It could even fill the range up to $2.55. But this is one of the better looking charts in my opinion right now. Right? We had resistance being formed. Obviously 1, 2, 3, 4, 5, 6, 7, 7.5, 8, 9 attempts to break out, and we were unable to do it. We've now broken out above this area, right? So now this area that has been serving as resistance since back in early or late March, since late March, this area has served as resistance. It has now been broken through. So what we would be waiting for, we don't want price to break below this daily low, right? Breaking below this daily low accepts us back into this range and could easily send us back towards $2.10. Okay? So for XRP, what we want to see is what I want to see. What I want to personally see is this $2.20 area hold. Okay? Now, we definitely, we have support that is printed here at $2.18, right? Technically speaking, because we had the resistance form. Price was unable to break below it, rejected that, and now is moving up. Depending on how this candle finishes, this could be a very weak candle finish, so we could still have bearish price action for the next couple of days. As long as we don't break below, as long as we don't break below about $2.18, we're okay. I would prefer that it didn't break below $2.21 just on this daily look. But all in all, this is looking pretty good. Even here you can see we had some consolidation. It was very tight. Tried to break down. It couldn't. Recovered this area. And now we have, as you can see here, we got support forming at about $2.25. Now, in Discord, excuse me. In Discord, we talked about how $2.25 for me was the area that we needed to break and close above because that was the previous weekly close, right? The previous weekly close was at about $2.25. So I felt like we needed to close above $2.25 in order to remain bullish on lower time frames. And so far we are doing that. So as long as we hold this area here, price can come back down and it can do anything. It can do this. It can do whatever it wants to. As long as it holds 225, we are good, in my opinion, for a move up into the 240 area, right? It could definitely serve as resistance, but just the way that it kind of melted through there, I would assume that if we get into this area, while we may see some short-term rejection, we probably get above it pretty quickly and just move up into the $2.45 to $2.50 area, right? So here, again, just to finish out the analysis, we got $2.34 acting as resistance right now. Okay. 234 is acting as resistance on the 4 hour. We could drop down to the 1 hour. That's a pretty good area of resistance in my opinion. Again, yeah, it looks like down to maybe $2.22. Looks like a pretty strong area of support where we consolidated, broke above, retested, and then broke out higher. Price could definitely come down in the 222 area. but I wouldn't want to see it hang out down here, right? If it hangs out down here too long, no bueno in my opinion. I would rather it kind of did something like this and whop, and then get back up here, or just fiddle around up here and work its way up in like that, right? Show some strength, show some consolidation up at resistance, and then break out, retest, and move on. So something like that would get me long. If we no diddy. If we were able to consolidate in this area above here, I would be looking to enter long on the breakout. If I miss the breakout, I would just look to get long on the pullback and the break back above whatever resistance was created. Okay? Otherwise, we could just, something like this is moving sideways. Price will move sideways a lot longer than you can stay sane. That's for sure. However, given the nature of price action on other majors like Bitcoin, Ethereum, and Solana, we're looking very bullish. So I would imagine that we're going to get up out of these areas, down in these lower bound ranges pretty quickly and pretty swiftly. Okay? So again, potential buys above $2.34, $234.50. Potential sells at this point. Potential sells if we were to close below $2.22. Otherwise, if we were to get up here just like everything else, push up just like this, right? If we were to push up, fail, consolidate, and then break down, that would get me short back towards this area, possibly down towards 222. But my lean is bullish right now. So I would prefer to see bullish price action develop, right? Whether that's just here, then we dip down, something like that would get me bullish. Yeah, there's several different scenarios, but just examples here. Those are what the kind of things that I would be looking for. All right, cool. Sweet, man. That was some really good breaking down, really good analysis. Again, I hadn't been on the charts for about a week, so feels good to kind of come back and get a fresh look. You get a fresh perspective on what the charts are doing, what price action is doing. And right now, all in all, we're looking really good. We're looking really good. Look at this, holding this level really well so far. So yeah, we'll have to see how price is going to develop over the next couple of days going into the month's end. And then, to start May, you can imagine, right, if you're looking at these, and I want y'all to really practice doing this. You have to imagine what you could see on higher time frames and how that would get you to react on lower time frames, right? So that the end of the month is coming in 2 days, right? So if we were to go on to the monthly time frame, okay, the end of the month is going to look like this, right? Something like this. Now, just as if you were looking at this on a lower time frame, what you would want to see is price wick down, not too far down, but you'd want to see price create a wick and then break above the high. And if it breaks above the high, you get expansion. Okay? And that can be into this area. Obviously, there's going to be a lot of resistance here, but you would look for something like this, and then the next candle to break above that high and respect this low, right? Respect this low, break above that high, whatever, do its thing, and continue pushing up, right? So you got to look at higher time frames and anticipate what the lower time frames are going to look like, what they would need to look like in order for you to do business. For me, I would need to see a wick created down lower first. I don't want to see price just pop up without creating a wick lower, because that means there's no range for buyers and sellers to interact, right? And when there's no range, that area is likely to be retested later on. Much more likely to be retested later on. So I would prefer to see a wick created down to the downside first, and then the body breaks above the high. Okay, and then I can get long above this area, right? Or if you are watching lower time frame support, you can get long on the wick, right? You can get long on the wick when it creates support, okay? But just as if this were a 5-minute time frame or a 30-minute time frame or whatever the case, you have to understand how you want the candles to develop. If you can't understand how you want candles to develop, then don't trade it. Until you understand what candles are going to be high probability setups for the next candle to go in your favor, don't trade anything. If you can't easily identify what will validate and invalidate your trade, then don't trade it, right? For me, an easy invalidation would be if we got too far down here. If we started wicking too far, like halfway below this candle, then I would start to be looking like, okay, on the lower time frame, we might be developing some bearish price action to continue going short and to continue filling this wick lower, right? Because candles shouldn't retrace over 50% if it's going to remain bullish. If we're in a bullish environment. Now, if we're in a consolidation, it's perfectly reasonable for a candle to trade over 50% of the previous candle because it's trading the lower range, right? And that's just how you have to look at these things. Keep it simple. Just understand what you're trying to look for, and everything will be just fine, right? So I want y'all to go over this, go look at this 5, 10, 15 times if you have to. Really dissect it, go into your charts, really look and observe how support and resistance acts, how price develops, and what candles allow you to break out of ranges, what candles will reject, what they look like. You have to do these things if you want to be successful doing this. You cannot just come to the chart and just slap open a trade and expect to win. It's not going to happen. That's how you lose your accounts. That's how you lose your confidence. That's how you lose your self-esteem. You go into depression. Now you're contemplating your whole life, etc., etc. Don't be that person, right? Don't be that person. Don't make it harder on yourself than it has to be. And don't think that you're going to miss out on anything, right? How many people do you think thought they were missing out on price going bullish on a Sunday as price reversed back from 83,000, 85,000 all the way up to 94,000 in one candle? How many people do you think FOMO longed in right here and then got completely obliterated, right? How many people do you think FOMO longed in right here and then got completely obliterated, right? How many people do you think FOMO shorted in right here and price just came back against them? Okay? You are always going to be presented opportunities in this market. The hardest thing to do, yet the most profitable thing to do in most circumstances, is to do nothing. Not being in a position is a position sometimes. And that is something that new traders especially, but even seasoned traders have problems understanding. Not being in a position is being in a position sometimes. A lot of the times. Because a lot of times the markets are going to move sideways and you just have to wait for price to come to you. You do that and you'll be perfectly fine. You don't need 1,000 indicators. You don't need the MACD, RSI divergence, FVG, SBX, YWXY plus B2 squared. You don't need any of that bullshit. Just read prices, read candles, and wait for price to develop in the way that you want to, and you're going to be just fine. All right, cool. If you stuck around for this whole video, please do me a favor. Hit that like button. Subscribe to the channel if you aren't subscribed already so you always stay up to date with any new videos that we have coming out. We are coming to bring y'all the easiest, simplest way to read price action, to read candles, to read charts, and identify high probability trade setups that can help propel your trading career, whether you're in its infancy or whether you've been doing it for a long time. We are always looking to refine, to build, and to perfect our strategies. And this is just one way of many ways that you can do that. And I'm here to help you guys through everything that you may need. So please leave me a comment. Let me know if there's anything you're still confused about. Let me know if there's concepts that you're not understanding, candlestick patterns that you don't understand, other things that you would like me to identify, other charts that you would like me to look at, anything. let me know. I will do my best to get it out for you guys. But until next time, I'm going to go ahead and let you guys go. I hope y'all have a wonderful rest of your week, and I hope you have a wonderful end to the first month of this quarter. Peace.